Welcome back to Squawk on the Street. Time now for our ETF Spotlight. Mike Santoli's back, taking a look at financials falling deeper into bear market territory. Hey, Mike.
Yeah, Carl, that's right. I mean, the overall sector down more than 20% from its earlier highs. If you look on a year-to-date basis, XLF down more than 13-14%. Look at the different slices of the financial sector. The KCE is one that I like to watch. It's the capital markets ETF, asset managers, investment banks, things like that. They've obviously been hurt a lot from the highs, but the banks, the pure banks, are also really right at the center of all this. I think this sell-off has gone beyond trying to explain it with, oh, it's a flat yield curve. It's going to be a little bit of a slowdown next year in terms of the overall economy, into asking what else might the performance of the banks right now be telling us about the broader macro environment, whether it's some kind of credit stress, concerns about corporate loans. I think all of that is feeding in right now. Also, though, late in the year, tax loss selling, you're hearing people say they still look cheap, but just unwilling to find a positive catalyst. I do think we're now also in the zone of saying, have investors capitulated? So look at this chart. It shows the flows into and out of the XLF, the broad S&P Spider financial sector ETF. This is from Renaissance Macro Research, showing that we've dipped into a heavy liquidation phase. Don't worry about the numbers on the left. It basically shows you lots of money coming out of this ETF, similar to previous periods when you've seen the XLF get very oversold and maybe at some point setting up for a buy. And this is really what the overall market reflects too. The market's been so relentless in this downtrend, we're starting to ask, are people kind of overdoing it sentiment-wise and flow-wise on the downside? But so far, not a lot of relief either with the sector or the broad market, guys.